The risk in the market has almost never been higher. We have Bitcoin coming all the way back down to $61,000, and you can see the fear is back in the market. And if this is a bull market still, well, that presents a major opportunity. So in today's show, we'll discuss, is this actually still a bull market? Is it a do or die situation? And what you should be looking to do next with your crypto portfolio. So let's get straight into the show content. Smash the like button, hit the bell notification, and definitely subscribe to the channel, and let's get into it. So if we do start off over here, of course, with the banter bubbles, well, you can see an absolute bloodbath on the daily, very red over there, weekly red. Even the monthly has started to turn down on a whole lot of coins over here, just the ones with relative strength, which continue to hold up. Hourly attempting to put in a little bit of a bounce, and I'm going to show you why the current levels that we're at right now as you watch the show are absolutely critical for the bulls to hold. So we've seen a mass amount of liquidations over the last couple of days. Again, in the last 24 hours, another $289 million worth of liquidations in the leverage markets over there. And you can see over here, of course, for the last while, it's just been relentless liquidations of the longs within the market. Now, something that I have discussed or posed as a potential opportunity was in this video over here that we did all the way back on the 9th of July when Bitcoin put in the low over here. I outlined the possibility for a potential inverse head and shoulders, which could potentially play out. And if you go to the current price action right now in the live chart update, you can see that so far so good. It is kind of following the trajectory. I'm going to lay out a couple of different scenarios for why this level is so important, but no matter which way you slice it, it's all going to come down to this, that you have a ultimate low over here and you're looking to set in a higher low. It's just a question of where does that high low get set in, and if you don't set in that high low, well, that's going to be really problematic, because then you need to come and look all the way down to those majorly low levels, which are potentially between $40,000 to about $50,000. That becomes the areas of interest. So much better seeing the inverse head and shoulders formation over here when you put it on a weekly line chart. Any of you can do this at home, and you can see looking to create that right shoulder right now. It would actually be good to see the weekly candle close somewhere around this region, and then next week we can start to pick up, because that would give almost a picture perfect right shoulder over here, with the right shoulder being higher than the head and almost in line with that left shoulder, symmetrically pretty perfect, coming off very low volatility as per the Bollinger Band with percentile over here, squeezing to new lows. So you are looking for big moves, right? If that does actually confirm and break out above the neckline, well, very quickly you might see prices in the $80,000 region, which is pretty substantial, right? Given current price actions, if you go from here to here, well, that's going to be a 30% move, and usually it happens pretty quick. So I've outlined this to the Discord community over the past couple of days, that when you look at the weekly chart, this is really what I'm focused on over here. This is labeled as the safe zone. As long as we hold within this zone and above this on a weekly close, there's still the possibility that bulls maintain control. But the scary zone is where you break below that $60,666 level, which you can now see we've already wicked below there. You definitely don't want to come back down below that level, because if you do, you open up the possibility, again, as mentioned, to go much low, creating another swing low, and that could reverse the entire bull market. So there's a lot to play for right now, and now is the time more than ever to remain hyper focused in the market. You don't want to be walking away right now and thinking you'll come back when it feels comfortable. This is the time to stick it out and stay strong, because if it is in fact the bull market, I outlined last week that anytime that you come into the fearful zone on the fear and greed index whilst in a bull market, those present the best opportunities. And we can actually overlay these time periods on a chart with price, and we can look at what that looks like. So this is what we've seen now. Fear and greed has come down to 37, and this is what it looks like, right? The bottom chart over here is going to relate to the actual fear and greed, and every time we've got into these extreme fearful zones, I've correlated with the yellow circles on the top chart, that being the price chart, where price was and what happened next. So if you look at the first one over here, Bitcoin came all the way down to pretty much that $16,000 low, give or take. You set in that extreme fear, led into a big bounce. You came down again to 19,700, led to a pretty big bounce over here and grinded the way up. Then we were stuck at 25, where people thought we weren't able to break out of that range, and the fear and greed reset right all the way back down to these lows, and that's where we went for a big move. Now, this has been one of the biggest resets that we've had on the fear and greed. If you look at the bottom one over here, look at this one. It's come down much lower than the last time when Bitcoin obviously wicked down to that $54,000 region, and now you can see price is holding up. So there's a little bit of a divergence over here actually between price putting in higher lows while the fear and greed is coming to lower levels. So I do think this is something to watch for a potential bounce from these zones. And at the end of the day, your high time frame still looks like this on a monthly scale, where you are flipping a very significant and important level that used to be resistance into now support. The longer you consolidate and hold above this level, the bigger the next move will be, and you need a long-term consolidation if you want those big explosive moves towards the upside. Right now, in terms of where this candle closed to current candle, well, we're actually 6 months into this consolidation. We have 28 days left to go, but assuming this candle does close, neutral again, which would be another boring, choppy month for crypto, that would be 6 months of consolidating above a very significant level, that level being that $60,000 zone. So we'll keep an eye on that. We've spoken also about the seasonality within the markets, which suggests that anywhere between August and October is where you look seasonally in Bitcoin's previous 10 years to put in major cycle lows. And we spoke about, on average, the loss of 13.64%. We spoke also about how price has drawn down, over time within this correction. We've looked at the weekly drawdowns, and the deepest drawdown that we saw was 16.43%, which if we got that would take price down to 57,500. Now, that would be one of the deepest corrections. So if you go on a weekly chart, and the way that I worked it out was like this, I had a look at each of the red candles on a weekly scale within this corrective phase that we've been in for the last 4 to 5 months. And I said, well, how deep have those corrections been? Now, this is one of the outliers now. It's becoming one of the deepest corrections. So far, that correction, I think from top to bottom has been, let's just quickly measure it out. It's been, there we go, about 14%. So give or take, this is more or less in alignment with what we've seen in terms of the deepest corrections, which is actually where you would start to look for a bounce. Now, we're seeing multiple different levels of confluence when it comes to this zone. I'm going to show you exactly where those levels are. And like I said, it all comes down to one thing. We have the low, and the expectation is that we're going to form a high low, whether it's there, or whether it's there. We're looking to form a high low within the market, and that is the do or die situation for the bulls. Now, we've got the hash ribbons buy indicator, which indicates that you should be forming a high low even in the presence of a pullback. That is a final shakeout. I'm also going to outlay what the Wyckoff accumulation schematic looks like that we also discussed a couple of weeks back when price was down here. We said break back inside of the range, and it's starting to look good. Now, you've also had additional confluence with the throwback into the 200 MA. The purple one is your 200 exponential moving average on the daily time frame. But look at that support coming in, bulls defending that level and immediately getting price back above the 200 MA. So that creates a very easy trade with a long over there. Stop loss goes below. Of course, you need to be prepared that there is a possibility you get wicked out of your longs once again. But this is what trading is about, is trying over and over again. You miss, and then eventually you hit a home run. That is the way that trading works. It's just like sport, right? You throw more shots and eventually you will succeed. Right now, we're also looking for full confirmation of this bounce. If bulls can get price above the 50% level, the 50% level has been taken from the high over here here down to the low. So this is your your entire trading range over here. If bulls can break that above the 50% level, which is 62,185, you'll increase the probability that this is the high low that's coming off the 200 MA, being the white one. The important thing to denote as well is these moving averages are angled towards the upside, which is conducive for continuation of the bull run. If these moving averages were angled towards the downside or flattening out and price was breaking below, that would be incredibly worrisome, but that's not the case yet, right? Now, if you do want to learn more about all of these things, by the way, I do even cover the hash ribbons indicator in Whale School. You do have time to still sign up. 18 days, 8 hours left. Sign up while there is still places available. Use the link below. This is my wealth of knowledge that I've given to you, the community, for the very, very, very expensive price of free. FREE. It costs you absolutely zero. It's free for you to join Whale School. My gift to you guys, use the link below. You are covered by the sponsors, right? The sponsors have covered the cost of the course for you. Now, again, if we go to another YouTube video that I did, this one was back on the 10th of July over here. As you can see, I discussed the potential for the Wyckoff accumulation schematic where price was in the spring phase at that particular point in time. You can see over here, we're looking at the spring phase right over here. As we created that low, we're looking to break back into the trading range with the yellow circled area, that highlighted area over there, and that's exactly what we saw, right? That relates to this period over here. So let's dig a little bit deeper into what this Wyckoff accumulation schematic looks like and the validity of it and whether it's true or not. Now, one thing that you can look at first and foremost is the volume. The volume is declining, right? As the volume declines, that gives validity to the Wyckoff accumulation schematic being true. Now, the Wyckoff accumulation schematic would look like this, right? This is what your expectations would be. Following that spring phase, you have a big push up. You come to backtest. We never really saw proper backtest into that range level, but instead we did something that you call jumping over the creek, right? Then sometimes you get that LPS phase, which is going to be a final test, basically a final test into this zone over here, which is going to be your prior resistance level that you're now looking to flip into support. So we broke below, we had the jump over the creek, we came back into the LPS phase over here, and now we're looking to hold that zone. This is the transition that takes place from phase C into phase D, which means that we're only just starting in phase D. And if the Wyckoff accumulation schematic is valid, well, you would expect that phase D should start marking up pretty aggressively over the coming days, and the LPS phase creates a wonderful, wonderful final buying opportunity before bulls actually take full control, and then you move into that sign of strength, right? Reclaiming above the trading range, the resistance level over there, flipping that into support, and then you go into phase E, which then becomes your markup phase. So I've kind of divided it up like this. This would essentially be, you know, the end of, again, that phase C, and only just starting to move into phase D pretty much from right now. From today onwards, if we do actually set in that high low over here, then your expectation is this is phase C between this line, and this is going to become phase D. What I like about this is that it's totally in alignment with everything that we looked at over here as per the timing, right? When we focus on the timing and the depth of each drawdown, especially within this corrective phase, well, we know that we have between 7 and 8 major corrections within a bull market. This bull market so far, we've seen 5 with a top to bottom drawdown of 27, or at least here we go. Let's just double check it. There we go. 27.67% is the current drawdown from top to bottom. We are 142 days into the correction, and I like my odds that this is going to transition us into phase D, because these Wyckoff accumulation schematics do take time. It all meets every criteria that we're looking for in terms of this being valid or not. And the good news is that basically the worst should be over. That should have been the worst, is the spring phase that we led to the big move up. And now you're looking for high low. This creates a high probability long opportunity. So I'm going to be taking the long opportunity pretty much right now. I think that this is a valid zone to start to look for a bounce. It might be a little bit premature. You can wait for higher confirmation, which would look like this. So I'll go into this chart over here. This is the BitFunded account. So if this is going to be the LPS phase transitioning from phase C into phase D, where we do start to look for a little bit of a markup, if you do want to remain patient, what you can do is you can monitor the price action on a low time frame, maybe like the 15 minutes over here, or even lower than that, and simply just monitor that price is creating higher highs and higher lows. Right now, there's still a lot of work to do to get above the breakdown level for the bulls. There we go. It's going to be this zone over here. Let's just quickly pull that up again. There we go. You need to get above this zone over here, which is quite far away, right? You are slowly but surely putting in high lows. I'm happy to take a long position over here with my stops below. The trade that I'm taking over here is on BitFunded, which is in the description below. Remember, if you go through here to BitFunded and you click over there, and we'll move that up, this ultimately qualifies you for funding. So instead of losing massive amounts of money attempting to leverage trade, you can pay a small audition fee, for example, $49 over here. And if you pass the challenge, which requires 8% profit, there is limitations to how much drawdown you can take, well, then you'll get $5,000 to trade with of their money, and you keep 90% of the profits. If you want to go for the bigger one, the expert mode is below. That's $100,000, but the challenge fee on this is $599. So the two-step process to get into BitFunded and how you would do it is you would need to come through here to the link in the description. It says point number 1, register on BitFunded using this link. Once you've done the registration, you're going to see something that will say promo code. By the way, there is no promo code. Just skip that. It doesn't matter. There's no promo code. Click that. Once you've signed up, filled in your details and registered, close that account, right? Then come through to point number 2, which is going to bring up this page. Select your challenge fee and then decide how you want to pay. A very, very key point as well for any of you that are subscribing to this, consider the amount of fees when making the transfer. So for example, if you're sending the transaction in crypto via Tron and it's $49, just send $51. Go a little bit above, because if you send exactly $49 and it takes $1 off the fee, they're going to register as having received $48, and then you might have issues registering and getting in. Anyway, point being said, I'm happy to take the trade over here. I'm pretty much going to enter at these exact levels over here, and I'm going in on just 1x leverage. So let's quickly reset that because we don't need to take any risk, right? The goal over here is to just get 8% profits, and then they give you your funding, right? It's as simple as that. So let's quickly re-enter that. There we go. And I'm going to say buy long, and that's it. Pretty much, there we go. I'm in the trade. So the order has been placed. It is below over here. There we go. It just got filled. There's the order. I'm in the long trade. I'll do it after the show, but I'm going to set my stop loss. You just come through over here. I'm going to set my stop loss just below that wick over there to limit the drawdown, right? So that is BitFunded. All right, let's continue on over here. So we're looking for price to break above. If you can get back above this zone over here, this is where you're going to get the break of structure, right? You need a market structure shift. You need to see a break above 65,300. So if you don't want to be catching a falling knife, which is what I essentially just did, but I have enough confidence based on the 200 MA and all other factors that I've shown you, I'm happy to take that trade and take the $49 loss if I don't win on that trade. Remember, it's like I'm playing with 5,000, but I only lose $49. If you want to be conservative, wait for price to push back above, break this level. The next throwback into the higher low is going to be your next best zone, right? Then you can start to go long like this with greater confluence that you're not catching a falling knife, that you've printed the low, you buy the higher low over here, and then you're looking for continuation higher. So that's what I'd be watching for over there. That is on Bitcoin. I also took this trade over here, the exact same trade on Bybit. You can see currently I am ranked 18th in this account. The record over here, the way that it works is your trading volume. So you need very, very minimal trading volume. I think you only need, here we go, for every $1 in trading volume you generate, you're going to get one raffle ticket, essentially. This becomes a raffle to win the Tesla Cybertruck. So to participate in that one, same thing. It's all in the top here. Use the link for Bybit, sign up, make a deposit. Once you've done that, come through to the competition link over here, click that, and pretty much join. So I am currently in that trade. You can see most of the liquidity as well is stacked towards the upside. All of it is on the top side over here. Pretty big liquidity on the high time frames in the form of short stop losses. So we'll be looking to target that. Now, there's been some big notable changes in the stock market and traditional markets as well. Some of you may have seen the major crashes that have been taking place, but there's been one big major change that every single person has missed, right? And we've spoken about this for months, looking for the breakdown, and that is on the DXY, the dollar index. We said over here, you're in a symmetrical triangle. We're waiting to break below the gray box. We said, now that we've lost this level, back tested that into resistance, we're looking for price to start to mark down pretty quickly. And it's following our lot lines almost to perfection over there. Got a big drop over here. Let's see if the DXY can start to close candles nice and low like this. Then you can say that this is the LPS phase for crypto and the final shakeout before prices do start to move up. So we need to see a bit more. We need to see time spent below this 103 mark on the DXY. The gray box over here is theoretically major support, right? This becomes high time frame support, which I can show like this. If I just scale out, there you go. You can see range highs. This becomes your range high. There we go. This becomes your range low. You're caught in a parallel channel. You've now lost the mid-level, the dotted dash line running up as the middle of that parallel channel rising towards the upside. We need to lose this zone. We need to get below that, and it's free sky just below, right? You'll fall below that, and then prices should start to move. We also have the stock market coming into major support, right? This is major support over here. So we are looking for a bounce. This is also something that we called already in the beginning of July. If you go through, probably even in these same videos over here, let's just quickly see. Probably in these same videos, I would have discussed it. There we go. Look at that. I spoke about the TD9 sequential top in play over here and the possibility that the stock market was going to start to pull back. And that's exactly what we've seen, right? We were looking for a 1 to 4 candle correction. We've got 1, 2, 3. There could be one more week of downside over here. And then we're looking for the stock market to bounce. You also have Coinbase coming into major support at the bottom in alignment with that 200-day moving average, which is about to meet the range low. That becomes a strong buy the dip scenario at $200, right? $200 for Coinbase. I think a phenomenal buy. Okay. ETH BTC is still looking for a potential high low in the making, same as ETH USD. Buyers are stepping in over here. You can see a little bit of a wick forming, but a lot of work to do. Definitely a lot of work to do for the bulls. Okay, I don't want to go on too much with the rest of the coins over here. I've given you a lot of information. Let's see if there's anything else noteworthy to discuss. Okay, if you do want to learn more, guys, just join Whale School. Literally everything that I've taught and everything that I use in terms of my show knowledge comes from Whale School. Everything is there. I see you guys say 𝗕𝗬𝗕𝗘 wants the Cybertruck. You know what to do, bro. You know what to do. Just don't call a friend. Just click the link and join into the competition. Pretty easy. Okay, DXY down, markets will also go down. No, DXY is opposite, right? Remember, if the DXY comes down, then risk on assets tend to rally. It's not always completely inversely correlated, but for the most part, it is. Okay, what else? Let's see. Is there anything else to look at? Let's look at quickly Solana. Solana is still maintaining the uptrend over here. You're looking for high low in the making. It's unfortunate that it did drop down over here because this would be the perfect back test into major support, and now it's pretty much blown through that area. But one thing that I am looking at is the key significance of the 50% 60% level, right? If you look at the origin of the move over here, I would say that was the last major test, and you run your fib from bottom to top. Well, you can see it's coming in at $145. That's going to be a zone of interest for Solana to potentially bounce off of that area. Let's see if Casper's been holding up. Remember, printing new all-time highs. There's a secondary opportunity. That's another long chance for you if you don't have a position in Casper and you are looking to get exposure. Let's just quickly pull this up. Where is it? There we go, long position. This would be it, right? You'd be looking at something like that. Pretty much tight stop, targeting all the way up to 23 cents, which is going to be the 1.618 fib extension on that move. This is a back test into range high support, but you do want to see it hold that, right? You need acceptance above that particular level. Okay, what else have we got? All right, let's see. Let me scan the list over here. Anything else sticking out like a sore thumb? Let's see. How's Mantra doing? Mantra obviously has come back to the 0.382. We spoke about that. This level over here was the 1.618 fib extension. We said that's your profit-taking zone. Price came down a bit, pushed back up again. Now thrown back to the 0.382 fib level. That is a buy the dip opportunity should Bitcoin start to bounce, right? That's the key word. Should Bitcoin actually bounce? So that's it from me, folks. I'll see you all on the next one. I hope you all have an absolutely stellar day. Use the links below. Join BitFunded, join the Cybertruck competition, and jump into Whale School while there's still an opportunity. Have a great weekend, and cheers for now.